Welcome to Stock Market Cycles Update. This is Friday the 13th. There's a word, triskaidekaphobia. That's the fear of the number 13. And my cousin today sent me the word paraskevidekatriophobia, which again is two Greek words together, Friday the 13th, fear. So hopefully none of you is afflicted with that. With that much in mind, there are several things to show for this week in the market. What I'd like to do actually is start out with a technical chart, and then we'll get into the projections. We told you a day or two ago about the 10-day moving average of the trading index, the ARMS index. It's a measurement of up volume, down volume in relation to up stocks and down stocks for those of you that are not acquainted with it. This is a chart of the trading index in the kind of rusty color on the bottom, and on the top, the Dow Jones Industrial Average. And a couple of things we want to point out here. We got down to a reading of 0.80, which has classically been an overbought reading in terms of the trading index. It used to happen fairly often back in the 60s, 70s, and 80s. But look at this chart. This chart goes back to 2012, actually, in September of 2012. And look how many times we have gotten down to this 8. The scale, a lot of people invert it so that the higher readings appear overbought, but this is done numerically. So a reading of 0.80 would be moving down into an overbought condition. Somewhat confusing for a lot of people, but it works as long as you know what it represents. So 2 days ago, on Wednesday of this week, we hit a 0.80 on the 10-day moving average of the trading index. This is how often we've done that. Now, here's the impressive thing. The last time it happened was right here. Guess when this was? This was right at high within a few days of the S&P 500 and the Dow a few days later in 2018, September, October 2018. So that was a really good signal that things were overbought, and look what happened after that to the market. Significant decline. But you can't always depend on it. It's not an infallible indicator. Before 2018, follow back. I mean, we came close a few times, but the last time we really hit it again was way back in 2013. Now, it was a pretty good signal then because there was a little short-term decline. You see the blue line here is the Dow. So indeed, it hit almost right on where that high occurred. But look at this one here. Again, very short-term decline, but by no means were there important tops involved with readings of 0.80. This was the important one here, and there are those that might argue that this is showing us the same thing. The projections belie that, and we'll show you what. We're going to show you our three important averages indexes, the Dow Industrials, the S&P 500, and the New York Composite. We've said often we like the New York Composite best because it tends to give consistently accurate projections more so than the other ones. The other ones are good too, but the New York tends to be the more accurate of all the projection generators. Right now you're looking at the Dow, and this was the low. The date here is August 15th. So from that low, we've had ourselves a good rally, and these were the few days when things were up in the air. Could we turn down sharply from there and not generate the projection? That didn't happen. We now have a very clear projection to the upside. On the Dow, the nominal 10-week upside projection is 28,158 to 28,442. Now, you may get confused from time to time because we used different time span offsets to get these projections. We use 27-minute charts. We use 65-minute cash charts. We use these particular daily, that's what this is, a daily chart, and we use weekly charts too. I like the dailies because they're fine-tuned more than the weekly, and so if I give you a nominal 10-week projection with these numbers, and then a few days before or after I give you one with numbers that are close but not exactly the same from a different time span chart, that's the reason why. But today we're going to look at the daily charts and look at the nominal 10-week projections. The offsets are 24.2, the red line, and 27.6, the blue line. So those are the projections for the Dow Jones Industrial Average. These are the equivalent projections for the S&P 500 Cash Index. Notice, first of all, we've showed you this before, the perfect downside projection coming into the low here in August. This was the projection box. We came down into it 1, 2, 3, 4 times before turning up. This was the questionable area right in here between the two offset lines. In order to confirm the upside projection, we had to get above the blue line. We did that in spades the last 2 or 3 days, especially Thursday and Friday of this week. We're well above this offset line, and that has generated a nominal 10-week projection of 31.14.28 to 31.37.14. Those are rounded off, obviously. So those are the projections, a nominal 10-week projections on the S&P 500. Again, these daily offsets are 24.2 and 27.6 days, giving that offset. Now let's take a look at the New York Composite Index. Here's the New York Composite Index. Almost a triple bottom here. In fact, this is almost looks like a potential inverted head and shoulders. And we had the same situation here, getting above the red, the 24.2 offset, sideways for 2 or 3 days, and then the last couple of days of this week, breaking convincingly above the blue line, which confirms the nominal 10-week upside projections. On the New York Composite Index, 13,522 rounded off to 13,686. Now, why are those numbers potentially important? Remember, the New York Composite Index made its all-time high in January of 2018. We've never gone above that high. The market has never, ever approached that high since January of 2018. The high in January of 2018 was 13,635.34. So if we get up to the upper side of this projection, that would take us just above the January high. But it's possible, as you can see, to fulfill this projection with a 13,521.22 or slightly higher. Getting in that box would, of course, fulfill this upside projection, and it would not take it to new all-time highs. That would be an interesting situation. Okay, we have 2 more charts to show you. These are weekly charts. We're at the end of the week now. And these show you how, no matter how you're analyzing the market, things can get a little bit tricky. This is how they might get a little bit tricky. This is the S&P 500 weekly bar chart. Notice that. We showed you this the other day. It got very, very close to invalidating this upside projection. That occurred from this low with a break above at the midpoint right here. And that projection gave, called for a move to 31.1289 to between 31.1289 and 32.8318. Big move up. This corresponds pretty closely with a nominal 10-week projection. In other words, if we get right to around the 3100 level, we told you this yesterday, that would satisfy both this projection and the nominal 10-week projection. This is a nominal 40-week. Remember, this is a 20-week offset. Now let's show you where it might get a little bit tricky. We'll show you the chart for the DJIA. Take a look at this chart. This is a weekly chart of the Dow Jones Industrial Average with the same 20-week offset. The action's been very different, though. We got the initial move off the December low. It gave this projection way up to these levels, 29,000 up to 31,000. But what happened after those were given was we got an invalidation. Not by much, mind you. We came just below the offset lines down here, gave an equivalent downside projection, which we never reached. That's sometimes a show of strength. But here's what happened. This is what I call a loop projection, where you come down quickly and do a little loop back up and get a short-term projection. Now, I can't answer this question definitively, but the question really becomes, Is this move up reestablishing this projection, breaking above here well up to this level? Because remember, on the S&P, those projections remain outstanding that were given with this move. It was never invalidated. So if the Dow is going to act like the S&P, you can argue that perhaps these projections have been reinstituted. I don't think that's the case here. I'll tell you that in terms of giving my own opinion. But here's the scary part for the bulls. Look what happened on that loop projection. The Dow theoretically came in and met 27,226 to 27,608. This week's high, 27,307. So it came into this projection window. If you want to be a bear, you can argue that, hey, the upside's been hit. There are no further projections outstanding in the Dow. This upside has been invalidated. Interesting, isn't it? I tend to favor the fact because both the New York and the S&P 500 have given significantly higher projections. And remember, the Dow also, its nominal 10-week projection is significantly higher than this. So based on those three charts, the odds favor very much in terms of cycle projections that we go to those higher numbers. That's it for this week. Stay tuned. Thanks for watching. Oh, please, if you're new to the update, go to the bottom right on YouTube, click the little red banner and subscribe. You will be notified of all the future updates. There's no cost involved. Just go there and subscribe. You'll get notifications for future updates. Thanks for watching. We'll talk to you on Monday.